Going to take a look at the week in business right now. Lots going on, obviously. Wonder how the trade wars or potential tariff threats are affecting it. Let's take a bit of a deeper dive here and find out what's going on. Paul Bagnell, business anchor reporter with BNN Bloomberg, is on the line. So, Paul, let me start with a general question here before we sort of get into the details. We all know that Donald Trump, when he was president in his first term, was very concerned with the stock market, how things were doing, the fact that things were going well. Now with these, with the potentials, I guess, for these, tariff threats, if they come through, we're starting to see the market react in a really interesting way, right? At the beginning, markets were worried, apparently, because markets were down. And now they seem to be saying that, this is a lot of bluster and nothing else, and markets continue to rise. So do you think this is strictly because of this tariff issue? What else might be going on here?
Aaron, there's a phrase in markets among market watchers called climbing a wall of worry, and what that means is that there are times when, even when there are all kinds of things that should be concerning to investors and should be concerning to big corporations who are have a big presence on stock markets, markets continue to just drift higher. And I think that's really what we're seeing now. There are a lot of economists in the United States who predict that the trade war that Donald Trump, trade wars, plural, that Donald Trump seems committed to starting will drive up inflation in the United States. Also, inflation remains pretty stubborn in the U.S. It's much higher in the U.S. than it is here. And that fact means the U.S. Federal Reserve Board may only reduce its key interest rate once this year, and it may happen in December, at the end of the year. That's what the market is now figuring. That's another market negative. But we continue to see markets move higher. Just today, the S&P 500, that's the big index in the United States, just before I came to speak to you, Aaron, was trading at about 6,115 points. That's within spitting distance of its all-time high reached on January 4th. January 24th. Here in Toronto, the benchmark S&P TSX Composite Index is also not far away from all-time record high territory.
All right. So I guess, the market will hold its breath, as you're suggesting here, and we'll wait to see what Donald Trump actually does. And if those tariffs come through, Paul, is the thinking that if we are going to see what he called yesterday, reciprocal tariffs, that's good or bad for the market?
It would be. I think it would be bad, clearly, and it would be bad for the U.S. economy as well. Another thing that we hear frequently from people who are pretty experienced at watching this kind of stuff is they continue to believe that these are aggressive opening bargaining positions by Donald Trump, and that what we will see ultimately is very much more modest tariffs, if we see tariffs at all. Now, Trump is impossible to predict. But during his first administration, that is what we saw. We saw threats of very, very steep tariffs. We saw him tear up the NAFTA agreement, the North American Free Trade Agreement. We saw him impose tariffs on Canadian steel and aluminum, and ultimately those things got negotiated down.
So let's kind of focus on Canada for just a second. We continue to do well. I know inflation to that same area, but as you mentioned, the Bank of Canada has been more aggressive here in cutting rates. But I look at a stock today, and I think people might be quite surprised to find out Air Canada reporting a loss today of $644 million, which is a big number, made even worse by the fact that their last quarter compares with a profit of $184 million. So what's going on here?
So Air Canada's results can be complicated. There are different versions of profit that they release. That you're correct. The company did report a net loss of $644 million. The stock is down today fairly substantially on trading. I can tell you as well that, however, that the company recorded its best ever fourth quarter revenue number. That's the sales that it receives from all its passengers of $5.5 billion, and adjusted EBITDA, which is a profit number, but it excludes some accounting items, came in at almost $700 million. So its numbers are complex. The stock is down today. It has fallen down substantially since the early portion of December. a lot of professional investors shy away from these stocks, airline stocks, because they can be so volatile. Air Canada flew 47 million passengers during the year, and it does have ambitious plans to drive up its revenue between now and 2028. It wants to get that annual revenue figure all the way up to $30 billion from the 22 that it recorded last year.
All right, last thing I want to touch on, and it does relate, I guess, to what we started with, which are potential tariffs. We know steel and aluminum, they were the first two mentioned by Donald Trump. So here we have a country where we're trying to build homes as quickly as we can, but now you have home builders warning of this will be, if he does in fact follow through, they call it a brutal blow to the sector.
Yeah, and they're worried about, as everybody in Canada is, a severe economic slowdown in Canada that would result from those tariffs being imposed on Canadian steel and aluminum. One economist at BMO calculates that we sell $35 billion worth of steel and aluminum to the United States. That's worth 1% of gross domestic product, so it is material. The Canadian economy is already slowing, as we know, and so for instance, the Ontario Home Builders Association believes that the tariffs could likely trigger a further economic slowdown in Canada. That would reduce investment in residential real estate, i.e. it would result in fewer new homes being built. That company's CEO, Scott Anderson, says it would be a brutal blow to the housing sector. And as we know, if fewer homes get built, either standalone homes or multi-unit homes, that has upward pressures on affordability. It's a classic supply-demand situation. So there's a lot riding on this the tariff thing.
Yeah.
People in Canada are really hoping. Governments and industry leaders and ordinary Canadians should be hoping that some sensible path forward is arrived at here, rather than a 25% tariff on our steel and aluminum.
I'll just ask one last thing as we wrap up,
Sure.
and that is, do you think, given all this uncertainty, because we know markets hate uncertainty, does this put the Bank of Canada on pause for interest rate cuts?
No, I don't think so. I mean, if the economy is slowing down and there is the threat of a further slowdown coming from the United States, the Bank of Canada would be more incentivized to cut interest rates to provide some stimulus to the economy. The interest rate tool is a fairly blunt tool. When economies are weak, you cut to make money a bit more available in hopes that people and businesses will borrow and spend and stimulate the economy through that spending. When economies are too hot, that results in inflation rising, and you want to cool inflation by raising rates to cool off, make money a bit more expensive, and discourage people from borrowing and spending. So I would say that the tariff threat from the United States and the economic uncertainty it introduces probably makes it more likely that the Bank of Canada would cut rates, and that makes it more likely that the Canadian dollar will continue to decline versus the U.S. dollar.
We leave it at that. Paul, I thank you so much. Really appreciate it.
Thanks a lot, Aaron. I appreciate it.